And thank you very much, Financial Secretary. We just had the policy address in Hong Kong, and we'll be looking forward to the budget, like I said, when they turn those ideas into practical reality. Now, the financial markets are where the action can happen fast and furious. But as fintech enables platforms to become more efficient, they can also increase the velocity, and there can be problems as well. You can have things like flash crashes or algorithms that will follow the market up or down. So to explore where we should be going with these, we have three financial luminaries to look at the future of fintech. We are going to be welcoming Laura Choy, who is the chairperson of the Hong Kong Exchanges and Clearing, in other words, the Hong Kong Stock Exchange. She's going to be joined by Bill Winters, who's joining us from London, where he is the group chief executive for Standard Chartered. And they are going to be moderated in their discussion by Keith Choy, who is the interim head of Intermediaries and the head of the Fintech Advisory Group at the Securities and Futures Commission. So ladies and gentlemen, let's welcome them here on stage. Here they come.
Good afternoon, ladies and gentlemen. We are delighted today to have Laura Choy, Chair Lady of Hong Kong Exchange, and Bill Winters, Group CEO of Standard Chartered, joining us this session in discussing fintech innovation, balancing opportunities and risks. The Exchange and Standard Chartered have been exploring the use of new technology in financial sector for quite some time. Tokenization is a trending topic in the financial markets now. So let's explore in greater detail today with Bill and Laura about their views and plans in this area. So let's start with the Exchange. The Exchange recently launched a settlement platform to streamline post-trade workflow for the northbound Stock Connect. So it involved the use of smart contract. Laura, could you share with us the Exchange considerations in deciding to introduce this technology into its infrastructure, and does the Exchange have any plans in further adopting smart contract, blockchain in other parts of its infrastructure?
Yeah, thank you, Keith. I think these days technology and innovation is very much part of our lives. At the Exchange, of course, we embrace technology. And we believe that technology will help us improve our operational efficiency. At the same time, technology unlocks new business opportunities for us. As you said, we have launched a new system to streamline and digitalize the payment system, the project Synapse. But we also have Finny. We also use AI to review the annual reports of our 2,600 listed companies. So we are trying to use technologies in every way. For example, in our London subsidiary, the London Metal Exchange, we have a product called LME Passport, which are really a portal for all the green and sustainable metal. So we're really embracing technology in all aspects and try to improve our platform business. But at the same time, we realize that innovation and technology has to be backed and balanced by the certainty, stability, and reliability in terms of risk management. I think it is very important that we balance innovation with all these, particularly in the governance and in how you as a regulator would demand of us, in the sense that we are making sure that our platform and our systems are robust, resilient, at the same time of embracing technology.
Thanks, Laura. Bill, we have heard of Standard Chartered's venture into tokenizations of trade finance assets, and its digital assets custodian arm, Stodia Custody. So what have the challenges been for Standard Chartered in those areas, and how do you see the interaction between digital asset and the traditional financial markets?
It's an area where we've spent a lot of time and lots of discussion around what we think the end state is, because we know for sure that whatever we invest in today will evolve quite a bit between now and when we get to whatever the end state is. And we do have a central view that the exchange of tokenized assets, very much in line with what Laura just said, the tokenization of assets, be they financial assets or real assets, once fully embedded, will be a much more efficient way of transacting and settling in all sorts of things, and everything from homes to carbon offsets to securities that can be tokenized. And as we approached the question of digital assets, and you think about how you want to build an infrastructure that prepares you for that end state, recognizing that there's an entire set of ecosystems, not just one ecosystem that needs to be built before you can get there. You start with some small steps. Now, as often happens when you're working in the regulated sector, which of course, as a bank we are, regulators are quite cautious about how the innovative economy is interacting with the established economy for some very good reasons. At the end of the day, our core purpose as a bank is to act as a safe store of value, to act as an administrator and participant in payment systems, which are critical utilities for any society. Do we really want to take risks with these critical social and economic functions? Of course not. We don't want to take risks. But at the same time, we know that if banks aren't part of the process of engaging in this innovation, that we'll end up with a bifurcated economy, which is actually riskier. It's both less efficient and riskier. So challenges, regulation is a challenge. Identifying the role that conventional financial market players can take on in the context of a fundamental innovation economy. Many of you in the room, many of you outside in the booths are not working in the regulated sector. You're working in the tech sector or in the unregulated financial services sector. So figuring out how to make that work is a constant challenge. It's also the great opportunity.
Yeah, thanks, Bill. In light of all these innovations and opportunities, so what is the exchange views in leading innovation and supporting the development of fintech in Hong Kong? How does the exchange plan to play a role, Laura?
I think in technology, in fintech particularly, as well as other tech, the exchange role as a market infrastructure, as a platform for raising capital, really plays a very crucial role in promoting and advancing technology. For example, if we look at all the research and development funding that will be required by many of the fintech startups as well as other tech startups, there is the exchange providing the special technology chapter, which we introduced this year. And before that, we have introduced SPAC last year, the special purpose for acquisition. And all these were the exchange respond to market demand for funding for these new technology. And in fintech is is one aspect where the exchange fundraising function will help. In other technology aspect, I can use an example. Biotech is one that affects our daily life. And then when we talk about renewable sustainability, if we look at wind and solar energy, what is needed in the next stage is really the upgrade of those renewable, make it more accessible, and that requires technology. And that's where the funding need will come, and that's where, in addition to the banks, the exchange can provide that platform. So we see ourselves very much as a facilitator in the ecosystem of fintech, of other technology. How do we bring it forward? How do we advance it? Really, a lot of funding will be required, and that is our role.
Thanks, Laura. Bill, let's switch the topic a little bit to tokenization. So what do you see as the upcoming trend of tokenization of financial products, and how is Standard Chartered preparing for all these developments? Have you seen any successful use cases arising from tokenization of all these assets? And what should the financial industry be focusing on to make it work?
Yeah, I think we're at a very, very early stage of tokenizing financial assets. So we've got a dozen or more pilots where we're looking at different things. You mentioned before the tokenization and distribution of trade receivables. So something that we've done with a group of financial market participants in a sandbox, a regulatory sandbox, where we've shown that it can work. We've shown that if you have investors that are prepared to make the investment themselves in the infrastructure, that the ability to both track the underlying trade receivables through the system, but at the same time, take a portfolio of assets and recognize the value of those assets, trade them efficiently. It should eliminate fraud to the extent that the system is backed by a good, consistent, and robustly maintained blockchain. And first time out, completely inefficient. As the ecosystem is built, as the infrastructure is put in place, I can imagine that the vast majority, if not all, of certain asset classes will trade in tokenized forms. You know, and that's in some ways it's the most interesting asset in mainstream banking because it's generally regarded as extremely low risk, but with a high risk of fraud, right? Mm-hmm. And also an extremely inefficient process. And I visited our trade processing center in Chennai about 6 years ago, and the team very proudly took me through the stack of documents like this. I think it was a Lianfeng into Walmart transportation of a product out of China into the US. And I think we made $400 on the transaction, 40 man-hours of work, and every one of those pieces of paper to me looked like a piece of fraud. Obviously, once that gets put on blockchains, the underlying assets are tokenized, fraud gone, efficient, et cetera. At the other end of the spectrum, we've got a savings product in Kenya where we're trying to introduce savings into a market where very few people have any disposable income or disposable savings at all. So the idea of buying a $1,000 government bond, which was the denomination of government bonds, it's impossible. Buy it, effectively securitize it, tokenize it, make this product available in an easy to track, easy to settle way, KYC and anti-money laundering screens done as appropriate. Again, getting started is hard. Once it becomes mainstream, we'll wonder how we ever did it the old-fashioned way.
Thank you. But if you want to catch the opportunity, you have to jump in early, right? So what's your advice on market participants can do to ride on the trend of tokenization?
Like I think anybody that's getting involved in the early stage of tokenizing financial assets is going to pay for it. Right? There's an investment, a technology investment, a learning curve, and some of those investments, like everything in the innovation economy, will be written off because we'll experiment with things that say, it's actually not the best way to do it. I mean, we had cryptocurrency-based payment mechanisms that looked perfect on paper, but when we really dug in, it was a write-off, right? And there are much better blockchain-based payment mechanisms that don't involve cryptocurrencies as a medium of exchange. Stablecoins being an obvious replacement. Perhaps we'll be ditching stablecoins in favor of CBDCs. We'll see, right? We'll see how that works. But to understand the applications, you have to be in the market. And to be in the market, you have to build the infrastructure. So the first step is understand what it is you're going for, what you imagine the end state to be. Start putting the infrastructure in place today. Don't put all your chips on one number because there's probably going to be a number of different approaches you can take. You'll learn, and that way you can be more innovative vis-a-vis your own customers and bring them along, and that way stay ahead of the game.
Thanks very much, Bill. Now, I have one final question for you, Laura. In your view, what does you see the exchange role in developing a sustainable and supportive ecosystem for the growth of innovative financial products?
I think we can look at it from different aspects. One, of course, as I mentioned earlier, we as a capital raising platform, and that way we can promote and help fintech. Another aspect is our self-embracing fintech in our own operations. We also had the launch of Fini a couple months ago, which is streamlining the payment system and making it much more user-friendly and helping the efficiency. The third aspect is that fintech technology in general is changing the behavior of our investors as well as the stakeholders, and we must rise to meet those demands. And a lot of the times, obviously, we can create products in those areas, but the reason we create the products is really in response to what the market wants. So we're very much in touch with the market constituents. You are on the financial advisory on the fintech, and the government has a cross-sector on the green finance. But on technology and on fintech in particular, we feel that we really have to watch very carefully what the clients and the investors are doing, like what the banks are doing, what other financial institutions are doing, and really see where the exchange could have a role to facilitate and to really embrace and make it work for everyone.
Thanks very much, Laura and Bill, for today's sessions. I'm sure you will all find Laura's and Bill's sharings about their experience and insight on the futures of fintech most inspiring. On a related note, the SFC will later today publish a circular on tokenized securities, as well as a circular on tokenized SFC authorized products. So stay tuned to check out the circular and to find out more about the SFC's policy on tokenization. Thank you again for joining us today at this very fruitful session with Laura and Bill this afternoon. Thank you.
Thank you.